All right, ladies and gentlemen, we are joined by some heavy hitters here today, Patrick. I'm super pumped to be talking to Simeon Papalias as well as Jas Thakkar of REC Canada. Patrick, I mean, it is awesome to have these guys here. We have been waiting to kind of bring these two brain trusts together, the Real Estate Investment Network as well as REC Canada. Today's the day, baby. Today's the day.
You know, we just really expanded our bench, so to speak, in terms of the talent and the depth by having trusted partners with REC. And we're really excited about it because it opens up a whole range of opportunities for the community in terms of insights. And so we're excited about that.
Well, Simeon, go ahead, over to you, Simeon, and give us a bit of an overview of REC.
We couldn't be more excited to make this partnership happen. It's been years in the making. And I can tell you, for me personally, I'm so delighted and excited to get in front of this incredible audience that I have been a huge fan of from the very moment that I found out about REIN 15 years ago. I've read the books from all the different publications that come out year after year. We have used those as our guiding star on a million different occasions. So as far as I'm concerned, I couldn't be happier to be here. And I know Jas, who is my partner of 15 years, couldn't be more excited to be on this call. So hello to the REIN Nation. My name is Simeon, and I'm one of the founders of the REC. And we represent Toronto and Ontario at the deepest level. Jazzy?
Yeah, I mean, thank you, Simos. And sorry, some of the guests are going to hear me call him Simos because that's what his mother always called him. And thank you to Patrick and JG for having us on. We are very excited about this partnership. And just really quickly to add to what Simos was saying about REC, we are a full service real estate company with 54 real estate agents now that we've been nurturing and cultivating for the last 15 years. Those 54 agents cover the greater Toronto area. We help clients with their first condo, their first home, moving up, what we call smart sizing, but where my focus and Simos's focus is really on is helping people create wealth in real estate and building that portfolio. And for anybody who's just getting to know us now, I mean, I think you're going to quickly catch on that we do like to talk a lot because we have a lot to say. I mean, we've been in the real estate business I've been licensed for 17 years now, right? And so we know what we're talking about. It's our passion. First and foremost, we're actually investors. So even before being real estate brokers, I mean, we're always looking for opportunities, right? It might be from a residential perspective. It might be from a commercial perspective. Simos has a long history in the restaurant business. So that's something that we're very, very comfortable with. And so we chose real estate as our vehicle to create wealth. Not that there's anything wrong with the others, the cryptos and the Bitcoins and the stocks and all that kind of stuff, but we chose real estate because we think there's an easier way to do it. There's an easier way to create wealth, and real estate could be that vehicle for anybody who's watching or listening now.
Thanks for that, Jas and Simeon. I mean, we bump up against all the time that there's a fundamental comment always, it seems to be in the investor space, that there's no such thing as cash flow properties in Toronto. There's no way to invest in Toronto because there's no such thing as cash flow. And, how do we put those kind of myths to rest? JG and I often will use the comment, you don't walk down the beach or down the river, picking up gold and diamonds. You have to dig for them, and you have to make sure that you're guided by people with experience in that space. It's not like, oh, let's just go do this. So kind of give us some insights into how do we bust that myth and give people some, I guess, hope, if you will, that no, there is cash flow out there.
Yeah. So I mean, I can just tell you right off the start, everybody has to remember there is at least 24 major asset classes. And I'm not talking about commercial versus residential. I'm talking about there's a dozen asset classes within residential. There's another 6,000 within commercial because you can do whatever you want. So I don't want anybody, what I would want to see is people stop generalizing and making assumptions. What I want to see is people listening to podcasts, reading books, asking for education more and more every day, because that's the way to literally bust all the myths. For anybody to assume the GTA doesn't have cash flow, we're talking about Canada's biggest market, the second or third largest market in North America. So if anybody can literally look at me in the eyes and say there's no cash flow in the GTA, I'm going to simply discard you completely, because you have no clue what you're talking about.
It's such a generalized, it's such a broad sweeping statement, isn't it?
That's right.
I think Jazz hit it right on they hit the head, the nail right on the head, which is to say there's so many different categories in that real estate space that to say there's no cash flow is just an irresponsible generalization.
What I was just going to quickly mention, Simos, is one thing that we do and help our clients with is for the last 17 years, we've been very, very lucky to help, a little over 700 clients year over year. And that's not to impress anyone. It's more to impress upon people like where all of our data is actually coming from. Out of the 700, we help investors with new build condos. And what we notice when people are running performas on a new build condo, they're using today's rent. And look, I get, like, I'm from an East Indian background. My mom negotiates over apples back home, so I understand being conservative. But if you're using today's rent for a building that's going to be built 4 years down the road, you're doing yourself a disservice. You're doing the property a disservice. So what we like to do is forecast conservatively what we think rents would be in 4 years based on not just like fluff in the air, but actual history. What has the GTA and like what's the numbers in terms of increase on rent? How has it actually been performing? And then running your numbers. I think, Simos, you can speak about this as well, buddy, because we run a lot of performance for our clients and they're just not running them properly.
Correct. And that's, which way do you do due diligence? So if you buy, and again, we use a new condo. If you were to buy a property that you're going to renovate or turn into a duplex, a triplex, whatever the case may be, and you just use, I can get it done at $125 a square foot. Well, if that's what you did 2 years ago, you're in for a little ringer. Mm-hmm. First of all, the supply chain is about 6 months behind and costs are about 60% higher than they were last year. Mm-hmm. So assumptions are what get people in trouble. Not having the right team in the lockdown get people in trouble. And that's no different. So if you were going to do a flip and you based your numbers on what you did a year ago or 2 years ago on a project in Edmonton versus a project in Toronto, you're finished. So I think what Jazz is referring to is if you're going to get into new construction, pre-construction, downtown Toronto, the first thing you're doing it for is not cash flow. The market appreciated by 24% last year, period. The year before that, 16, the year before that, 14, the year before that, 18, 6, 4. I don't care. If you don't respect that happened, you're in denial. Am I saying it's going to happen again? The answer is no. Use 5% for your own calculations, but don't think you're doing yourself a favor. If you're going to put capital into a market and you're chasing appreciation, you need to be smart. You need to ask professionals as to which market within the market you want to go into. Where does Jazz think it's going to go higher? Because he'll tell you. Because this is with our business. If you're looking for an income property conversion, if you're looking for multifamily, not Toronto. What's Toronto? Toronto's 130 different micro markets, all with unique circumstances. One road turns into a one-way, you're finished if you don't know what you're doing.
To Patrick's earlier point as well, like you need to dig for these deals. And are they on MLS? Yeah, some of them are, and some of them are not. And so you need to get around. I mean, the community here is amazing and talking to people. But go ahead, JG.
Well, we'll touch on that next, Jazz, because I want to ask the question about identifying opportunities next. But I want to, there's a couple of things I want to slow it down. First of all, this is the easiest Facebook Live I've ever hosted because I asked one question. You guys talk for 10 minutes. I love it. This makes my job easy. This is awesome. Thank you so much for being so amazing at what you guys do. Also, I want to just put it on record that I want to ask the question if it's okay if I start calling Simeon Simos, because I think it's the coolest nickname on Earth. So I might go down that road myself.
Hey, Joey, I'll answer. JG, I'll answer for him. Yes, the answer is yes, you can.
That's good. So let's talk about that though, Jazz, because I think Simeon brings up a good point, which is there's GTA, and that's the thing is people blanket the GTA. Just Toronto is 100 plus markets. Imagine the GTA, you're talking about hundreds of possible markets there with thousands of possible opportunities. How do you identify these opportunities? And either one of you can answer this, but how do you identify these opportunities? Because it could be so overwhelming.
Yeah, look, we're looking for where can we add value to certain properties, right? Can we add an income suite? Now, some parts of the GTA, they're a little easier than others. For like, if you compare the Durham region to the Peel region, right? And you need to look into the bylaws and the zoning and what permits you need. But we're looking for where is that easier to do? A, B, really, I mean, at the highest level. I mean, there's a reason that for over 500 years, people have been using the adage of location, location, location. For us here at REC, and it's not the only way to look at it, but for us, it's always been what's closest to transit. If we can get to a major transit line, i.e. the subway, the underground subway here in the GTA, well, Toronto specifically, or go transit lines. Like, can we get close to to a train station? Can we get close to at least a GO bus station? Because what we know that values over time appreciate the highest when you're under about 500 meters of a major transit line. But what also happens, the rentability of that property shoots through the roof. You get higher rents, you get people who are wanting to stay longer, because someone who's renting, generally speaking, they're not driving or they don't need a car. In fact, I mean, the younger generation, anyone who's 20 to 30, I think 98% of them, and this is not a true fact, but off the top of my head, I'm going to say that 98% of them don't even have a driver's license. So they need transit lines, right? And so we're always looking at the highest level, location, 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 because that tells us where is the transit lines, and that's where our customers, where our tenants, that's where they're going to be.
There's something I want to bring, that I got to point out here, that I want to shine a light on. And I think that we've said it in a couple different things, but I want to kind of make it a little bit more pragmatic. When we look at what you talked about, new construction or pre-construction, given what's going on in the world, I mean, I've seen lots of people make really devastating mistakes in that space. Okay. And I want to shine a light on something that's fundamental. The one thing about REC, you've got whatever it is, 54 experts on your team. I mean, collectively, there's a lot of horsepower in terms of in the trenches. Here's the thing. You're in the trenches, boots on the ground, in the street, doing this stuff, number one. But new construction, pre-construction is a standalone strategy. I think people overall don't understand that. You just don't throw money at a pre-construction. There's thought that goes into it. There's OMs that have to be read. There's actually a strategy and an education, and you need that guide. You need that Sherpa to take you through that process, and no better than individuals with boots on the ground. Now, I'm sure all your guys can sell pre-construction, but there's going to be specific guys that really know what the hell's going on, right? And it's why it's so important.
Just like there's guys that know income properties, just like there are guys that know multifamily.
Yeah.
So the answer is, for sure, you need disciplined professionals.
Yes.
But the one thing that we as a group do differently, what sets us apart and what's been able to get us here, is that JG said something earlier about how do you look at the GTA not be overwhelmed. And the very first thing that the REC implemented 15 years ago was what we call today the REAP, the Real Estate Action Plan. If any single person, if you, Patrick, went to our website and put in Patrick, Francie, Reen, enter, the first thing you're going to get is a call from our concierge that's going to say, Patrick, before you can speak to anyone, you have to sit down with either Jazz, Simeon, or one of the senior concierge members, one of our investor coaches, to go through a questionnaire, what's commonly known in the stock world as a KYC. We don't have to do that by law, but this is where we start. So when Patrick from Vancouver says, Simeon, there's too much for me, where do I start? Well, you're going to tell me where I'm going to start, because I'm going to do your goals, your objectives, your tolerance for risk. If you don't have a tolerance for risk, how can you buy pre-construction? Mm-hmm. It's a future facing investment in its asset class.
Yeah, that's just what it is.
But if you're 35 or 40 with 20 working years ahead of you and a job that pays you $200K a year, you would be a fool not to invest in that asset class, because income properties will only exacerbate your income tax problem. So everybody's in a different stage of life. Everybody's goals are different. And if there's one thing that my partner and I have done, is structure that onboarding process to a science where we actually get to meet our clients' goals, not our own agenda. That would be my...
This is very, very impactful. And the reason that I find this so amazing is that, so many people, Patrick and I are on media all the time and in live events all the time, and everyone asks us the same question, and they're always generalized questions, right? But it's so difficult. I mean, like you said, just that example, Simeon, of the person that, one person earns $200K a year, the other person owns $50K a year. One person's retiring in 2 years, the other one's retiring in 25 years. One has 3 kids, one has no kids. There's all these various factors which changes and impacts what you want real estate to do for you. And most people don't even ask themselves that question.
I love that.
Right?
It's so true, JJ. I think, over our 15, 17 years, that is the most important question you need to ask yourself, right? Because I myself, for example, even if I had, like in my portfolio right now, I'm all about wealth creation. So I don't need the $1,000, $2,000 a month. I have a day job. And so that covers my lifestyle. It covers my expenses. Do I take the cash flow if it comes? 100%, yes. But I'm going to invest into areas for myself where I know I'm going to get the long-term appreciation and the consistency of tenants. I don't want to have to turn over my tenants often because, there's shelves behind me here. Like, I didn't put up these shelves. My team knows, do not put a hammer in Jazz's hands. So I know what I'm good at. Actually. I kind of like doing this stuff. Like, in fact, my VP and our VP, Laura, put this stuff up here. But I know that I'm looking for long-term wealth creation. In Simos's portfolio, which is, consists of him and I doing a lot of stuff together, it's the same. Where if we're even if we're breaking even on a property, we're okay with that. Why? Because we know we're getting that passive appreciation, we're getting the mortgage pay down, we're getting the tax advantages, and we're all in Canada here, and we know how big and how important that is, that we look at it as the 5-course kind of menu. It's not just cash flow to us, which is really the icing on the cake, but then you have all these other courses, the passive appreciation, tax strategies, pay down, the mortgage pay down, and as well as the forced appreciation that if you do add an income suite. So I really hope today people get an understanding of, JJ, I think you said it perfectly, man. Like, why are you investing into real estate, and what are you looking for it to do for your life? Because it's going to be different than Patrick's, because he's in a different stage in his life, and I'm we're all in different stages of our life. It really, I still think it's one of, if not the best investment out there, but you got to really find out your why, because when somebody throws a pre-construction condo at you, like, yeah, it might sound good because you came across a good-looking guy like me and Simos, but it might not actually make sense for your portfolio. So then don't get that investor shiny object syndrome that so many of our clients go through. Like, I want to look at a pre-construction and a multiplex and a duplex and a REIT, and then they fall into paralysis by analysis. Like, there's a massive sign above my head, and my lighting's bad today. It says ready, fire, aim. And boom, the lights come on when I say that miraculously. It says, Laura, if you can just click that light off at the top one. It says ready, fire, aim. It's a reminder for all of our clients that you need to pull the trigger. Like, in real estate, we're very lucky that you can.
Oh, there goes the internet. You were saving the best for last right there.
Saving the best for last.
So the good news is that we've been around each other long enough where I can literally complete my partner's sentences. He was going down that we're so lucky that real estate is the only asset class that you can literally tie up and do your due diligence after, making it literally one of the only asset classes that you play for keeps where you have the luxury of making a conditional offer.
Yeah,
maybe not in all markets, not all the time, but 99% of the time you are in control of what goes into your portfolio, guys. So even in markets where the stakes are high, like our market, The stakes couldn't be higher when you're talking about an entry point of $1 million plus. I mean, you guys are Vancouver, et cetera, so you know very well what I'm referring to. It's not. These are markets that are not for the weak of heart.
Yeah.
But at the end of the day, the biggest returns in real estate do happen in Canada's biggest markets, for sure.
Now, Simeon, I think Jazz will. I just let him back into the room, so he should be coming back here shortly. There's the man. You know, Jazz, listen, Simos over there completed your thought. He knows exactly what you're thinking before you think it. So that's all good. He finished your thought.
It's so funny. The team was like, don't worry, Simos is there. Yeah, let me guess. He's going to finish your sentence. I was like, yeah, I'm sure he is.
So let me ask the final question, gents, because we're going to have to start wrapping this thing up. And that is, what is the best investment class in the GTA, in your opinion? And I know it's a loaded question, and I know it's a bit of a general question, but let's just touch on a couple things, and then we'll wrap on that.
Go ahead, Jesse.
Oh, okay. So, I'll give you my thoughts on it, and Simos, I would love to hear yours as well, because I know it changes from time to time when we're going with what's happening in the market. I personally think that the best investment is a multiplex, if like in the GTA.
How do you define that? How do you define?
I apologize. Five doors and above. For me, it's 5 and more. Because I just think that the long-term growth and the necessity of it, like there's just not a lot of supply. There is not a lot of multiplexes. It's a higher price ticket, so you need more capital to get in. You need to know what you're doing, because you're not just managing one tenant. But I know what's happened in our personal portfolios with the multiplexes that we own. We've just grown our portfolio so much. Now, really quickly, I think the best way to get started with investing into real estate in the GTA market, specifically Toronto for a second, is with a new build, because it's so passive. It's so boring. It's like watching paint dry. It's not exciting whatsoever, but it allows somebody, especially like if someone who's never done this before, to get their feet wet in a very passive way, meaning that 20% that you need to put down as an investor, you could do that over a 3-year period, and it becomes the best forced savings plan out there. Because once you sign and you go through the 10-day due diligence period here in Ontario, then you have to come up with those deposits. So if you're thinking about buying the Rolex or the Benz or the Ferrari, not that there's anything wrong with it, but you got to remember that you got to put those installments down. So I think the easiest and the best for a starter and a beginner is a pre-construction, but overall it'd be multiplex. Simos, I'm really curious to hear what your thoughts are really quickly, man.
Yeah, so multiplex is by far the safest, strongest, and best investment you can make. Forget Toronto, but anywhere in Canada today. Alberta, Manitoba, and Ontario were identified by Scotiabank as early as yesterday in their latest report for holes in housing. Ontario leading the pack with 650,000 doors short. Alberta with 65,000, Manitoba with about 18,000 short. So if you need to follow the cycles, you need to follow everything that's important. When we're 650,000 doors behind, I can tell you that over the next decade, the world can throw pandemics and they can throw tsunamis, but if people want to live in Canada, which they do, and they're coming in at 330,000 people per year, and that was fulfilled in a year of a pandemic. Why? Because we need them for more than housing reasons. We need them for their income, for their talent, and for everything else. These are safe markets. Get your head straight. Multifam, best of all time. Cap rates are very low, not an entry-level product. As Jazz said, best entry-level product by far, pre-construction, which allows you a 4-year window to close and grow at the same time.
I'm gonna open the door to another episode of this, or maybe even a working session or a master class.
Yeah.
But when you say the words pre-construction, that's a perfect example of like a slew of opportunities. Pre-construction doesn't just mean condos. There are many types of pre-construction deals, and some make more sense than others. So I love it, Simeon. I love that you opened that door, because we'll talk about that more. Jazz?
JG, really quickly to what you said, I got 50 projects at my desk right now. brought to me by Simos, and myself and my VP right now are going to be going through these projects, and we're going to narrow this down to about 5 or 6 for the year. Like we get 50,
For the
60
year.
for the year, because we have a specific due diligence when it comes to pre-construction, condos, and investing into new builds, whatever word you want to use. But we get 50 to 60 a year, but we narrow it down to about 5. I'm going to call it like on the high end 6 a year, because they just don't match and don't check off the box on all the things that you need to know. And the most important is buying at the absolute first access of allocation. But maybe we can leave that as the cliffhanger for the next time we get together.
Yeah, so I think there's a couple things here that I want to point out, as we wrap. There's no question about boots on the ground, different strategies, experience, going in, really equipped to make good decisions. But I want to point something out here. We talk about real estate investing, and prior to the pandemic, it was something that people did, and it was really kind of a specific cohort. Now we're starting to see more and more people get into the space. And here's the fundamental reason. We're in an absolute economic time that we've never seen before, unprecedented what's happening economically. And real estate is also about cash preservation, value preservation, and staying ahead of what we're seeing happen that will happen for an extended period of time in the world of inflating assets. And so it's so important that you do that, number one, so that there is some different reasons why people need to look at real estate as an asset class. But that's not to say that you go in haphazard, because it's in markets like this. Simeon, I know you know this, Jazz, you've seen it, you've been around it a long time. Everybody's a genius until it comes back to haunt them. The mistakes they made here, come back to bite them in the butt years later. So it's why it's so important. Yes, asset class called real estate, perfect. Yes, this is the time to do it, given what's happening economically. This isn't about speculating. It's about investing based on really great decisions. But you have to do it right and not buy into the hype. And I know that you guys are there to get grounded and to support your clients and being grounded.
We're data driven. We're data driven, Patrick and JG, to the point of it's sickening how much data we use to come up with our decisions. That room that Jazz is in, he's literally Jazz runs the absolute sale to client facing vertical of our business. So it's that very room that people like. We process over $500 million a year. And me and Jazz have to go to bed every night knowing that people have placed this much market. I'm talking year in, year out. 600, 700, 900 transactions a year. It's a lot of people that we give guidance to. And we're not going to do that based on 50 projects. That stack that he showed you, that's real. And the reason and I'll say this again, 5 or 6 projects, because that's not resale. I can't go and print off the data from the neighborhood today. But if we're going to put a couple hundred people into projects that are going to come to fruition over 5-6 years, we need to know that the builder is right, that they've done it before multiple times, that they've delivered wins multiple times. Data driven.
Yeah,
on everything that we.
This is exactly why we are bringing. This is like bringing the Titans together. REC and Rain coming together. You have 2 incredible organizations. Both believe in making data-driven decisions, and we're honored to announce this trusted partnership. We're honored to bring you guys into the fold and to help this incredible community we have, the Real Estate Investment Network, to work with your 54+ experts. Feet on the street, boots on the ground. Absolutely love it. So Jazz, Simeon, Simos, thank you so much. Appreciate your time here today, gents.
Thank you so much for having us.
Thanks,
Thank you.